What's going on, guys? Welcome back to the channel. Mitch McConnell, the unthinkable happens to him right before live camera. We're going to talk about Mitch McConnell and what is going on here. Walmart has gotten a lot of customers completely just pissed off with this new direction that they're headed in. We're going to talk about Walmart's new direction going forward. And I'm also going to share with you guys how to generate $10,000 in dividend income. I'm going to share with you guys 3 stocks that can help pay out passive income in the form of dividend payments through these particular dividend paying stocks. But if you guys are new to the channel, please consider subscribing to the channel. And while you guys are at it, go ahead and drop a quick like for the video. I would totally appreciate it. Well, guys, a very unfortunate situation happened to Mitch McConnell, and we've had this discussion many times. We've looked at many older lawmakers such as Nancy Pelosi, our current president in office. In the Oval Office, President Joseph Robinette Biden, and none other than Mitch McConnell, as well as many others who are well over the age of 80, roundabout 80 and up. And we've talked about having term limits, and we've talked about the mental virality or vitality of these older politicians and lawmakers who are effectively leading our country. And they're, for lack of a better term, they're just incompetent at this point in terms of their own mental faculties. And it's wild that you have people who are 80, 90, 100 years old. It's scary enough to have them driving cars, some of them. Now, obviously, there's an anomaly. There's some people, I don't want to say, there's age discrimination, but it's just the simple fact of the matter is that after you get beyond a certain age, your abilities begin to deteriorate. And I mean, we've seen a number of times President Joe Biden tripping up the stairs of Air Force One, constantly falling. There have been numerous different verbal gaffes. There have been U.S. Military and secrets of our country spilled by the president on accident. And this is just yet another situation and example of our lawmakers. And it doesn't matter if you're a Democrat or Republican. This is another example of why we need term limits. I personally think that there should be an age limit, but there should also be a term limit. If you've served in Congress for a certain number of years, you need to call it quits. If you're over a certain age, you need to go ahead and freaking retire. You can't have these lifelong jobs where you're manipulating the whole country. I digress. So Elon Musk, he called Senate Minority Leader Mitch McConnell abruptly freezing mid-sentence insane. He said it was insane, and it was insane, because the first time I had looked at it, I was like, what the heck is going on here? Did he just, what is he staring at? He just went blank. So really quickly, I want to share with you guys, because not everyone has seen it, but I'm going to just quickly share with you guys exactly what happened.
Bipartisan cooperation and a string of
This is wild, guys. This is wild. He's just, it's like he just powered off. He's in sleep mode. He doesn't even know where he is.
Do you want to say anything else to the press?
Go ahead, John.
Let's go back to you.
Go ahead, John.
What were your initial thoughts when you guys first saw that? As a matter of fact, for those of you guys who just saw that, what were your initial thoughts? Did you think that he was trying to think of something? Did you what was going through your mind when you first saw Mitch McConnell just kind of go blank? Anyway, so the billionaire Elon Musk, Twitter boss, he suggested that that there needs to be a constitutional amendment for term limits, and I have to agree. We need term limits. Mitch McConnell suddenly fell silent during a weekly press conference on Wednesday. And even Elon Musk himself, who is aligned with Republicans in Congress, he thinks that Senate Minority Leader Mitch McConnell abruptly freezing mid-sentence during a weekly Republican leadership press conference was insane. I'm willing to venture to guess that Elon Musk would probably say, "Hey, Mitch McConnell, you need to go ahead and step down, my friend. You know, you've got a few more, hopefully several more years of life left. Enjoy that with your family and, pass the torch on." Billionaire Twitter boss suggested that there needs to be term limits added to the Constitution. Quote, he said, we need a constitutional amendment. This is insane. And he's not the only one. You know, the 81-year-old Senate Minority Leader from Kentucky, Mitch McConnell, he returned to the podium where he literally took questions from reporters and was forced to address the incident. He said he's fine. And how are you fine? Like, to me, like, he displayed, and I'm not a doctor, but he literally displayed every stereotypical example of what having a stroke on live TV would look like. He was literally an empty suit. Like, it's just unbelievable how this just happened. And then he said he's fine, but I'm willing to bet he had no idea where he even freaking was. So a McConnell aide said that the GOP senator stepped away because he felt lightheaded and insisted that he was sharp when he returned to take questions. What do y'all think on that? Do you think that the Senate Minority Leader was sharp enough to take questions? Or do you think that Mitch McConnell, as well as maybe even several other older incompetent members of Congress, need to step down? Not to say that Mitch McConnell is incompetent, because, I mean, honestly, I think that he's actually quite brilliant. But this particular situation certainly leads you to believe that, hey, maybe it's about time to go ahead and retire. Now, broadly speaking, Americans also think that their government is too old. And I am one of them. I think that our government is way too old. I feel like the vast majority of our government is well over, 60 years old. And I think we need some new blood in Congress. I think that we need some new opinions and new direction, less corruption. An Insider Morning Consult poll conducted last year found that 77% of Americans would support an age cap on lawmakers serving in Congress. The survey was conducted as a part of the Insider's expansive red, white, gray series of reports that explored how the U.S. has effectively become a gerontocracy. I don't even know how to pronounce that word. Anyway, so public support for passing an age cap is likely not enough, as experts are saying that it would likely take a constitutional amendment to impose such a change. And of course, the people in office who would be in charge of putting this thing through, they're not going to support that. They want to be able to milk the city and milk the country and manipulate for the life of their term. Sinead O'Connor, unfortunately, has passed away, and my thoughts and condolences go out to her, her family, and close friends. Police have issued a statement on the death of the Irish musician Sinead O'Connor. Her death was confirmed by her family on Wednesday. The Dublin-born musician died on Wednesday, age 56, after being found unresponsive in a residential address. The cause of death is still unknown, and but it's really heartbreaking. No medical cause was given for Sinead O'Connor's death. But again, she was a very well-known musician, and me personally, I kind of grew up to some of her songs as my grandmother would take care of me in my earlier years of life. I remember kind of riding in my grandmother's car and listening to some of her songs. Shoppers at Walmart are pissed off. They're not happy with this new direction. And basically, Walmart's heading in the wrong direction, according to many shoppers, with this new packaging. And, as one of the largest U.S. retailers, Walmart is constantly switching things up. And, whether that's introducing exciting new products to customers or, just trying to keep up with the ever evolving technology, most of the changes that Walmart introduces are met with positive feedback from its loyal shoppers. But some have missed the mark. And now the retailer is reportedly opting for new product packaging that some customers pretty much, they're saying that it means that the company is heading in the wrong direction. So Walmart's getting a lot of pushback. Now, me personally, I don't think it's that big of a deal. Now, I don't think it's anything crazy. It's nothing, wild like what we saw over in Target or anything like that. And at the end of the day, you're just going to buy this stuff, dump the contents into the pot, cook it, and throw the packaging away. So in my opinion, I don't personally care. But of course, everybody has their own opinion, and some people are just completely losing their shirts. I'm just going to try to keep it PG on here. But anyway, so again, like most big box retailers, Walmart maintains several different house brands, including its Great Value line. They have Equate and, several other brands. But anyway, in one of these subreddits, one customer posted a picture of this new pasta packaging for Great Value. And they're basically saying that Walmart is slowly swapping from cardboard to plastic packaging with their pasta, end quote. Now, if they're going from cardboard to plastic, isn't that worse for the environment? Like, because at least paper and cardboards, like, it eventually breaks down and can be recycled. Not to say you can't recycle plastic, but depending upon the kind of plastic it is, it could take like substantially longer to break down compared to cardboard or paper. So I don't know why they would go from cardboard to plastic. That doesn't make, unless it's cheaper. But then again, if it's cheaper but more harmful to the environment, I don't know about that. And then even if it is cheaper, are we going to get our prices lower because they were able to save money? Or do they reduce their expenses, keep the prices the same, or even raise them and increase their profit margin and not pass the savings on to consumers? Your guess is as good as mine on that one. I'm definitely going to have to keep an eye on the prices. But me personally, I'm not a big fan of the Great Value products, a lot of them. But, for those who are, definitely drop me some comments down below. Let me know what you guys think. Now, if you want $10,000 in annual dividend income, well, you're in luck. So if you're looking to grow your passive income streams with dividend stocks, there's a lot of different super high yield options. Now, obviously, there's high yield savings accounts. There's high yielding treasury bonds now. Last I checked, the treasury bonds are now over 5.52%. If I'm not mistaken. Where can you get treasury bonds from or high yield savings accounts? Well, lots of different places. Chase, JP Morgan Chase, E-Trade, Betterment, basically they're Fidelity. There's so many different companies that you can, investment brokerage companies that you can obtain these different assets from. But unfortunately, high dividend yields are usually a sign that the stock market has lost confidence in a company's ability to raise its dividend obligation over time. But I've got 3 stocks that I want to share with you guys. And these offer unusual combinations of high yields and also a solid chance to maintain and raise their payouts in the years to come. Who doesn't want to get a raise in the years to come, right? So let's talk about Verizon. Everybody's heard of the telecommunication wireless company, Verizon. And, an investment of $43,000 is a lot of money, but it is enough to generate $3,333 in annual dividend income from Verizon, ticker symbol VZ. Now, at the moment, plus the company's well known for steadily raising its payout. Last September, the telecom giant actually raised its dividend payout for the 16th consecutive year. And also, I don't know how many of you guys are aware of qualified dividends. Well, basically, I'm not a tax attorney. I'm not a tax advisor. This is not tax advice. This is not investment advice. Always do your own homework. Always do your own due diligence. Qualified dividends actually get preferential tax treatment. And in some cases, you can actually earn passive income through qualified dividends payments and actually not have to pay any taxes because, again, preferential tax treatment on qualified dividends. Definitely talk to your tax advisor about that. And at recent prices, the Verizon stock offers a big 7.6% yield, which is a lot higher than most savings accounts. And, if you're trying to grow your net worth, this is a great way to do it, potentially. And shareholders can reasonably expect another bump in a couple months, assuming that they raise their dividend again, as they have done historically. Second quarter earnings per share, they pull back by 11% year over year to $1.10 per share. Now, the earnings contraction was a little bit disappointing, but the company is still earning more than enough to cover a quarterly dividend set at 65 cents per share. So obviously, the more shares you have, the larger your dividend payout check will be. Now, at the moment, Verizon has a little over 2.3 million fixed wireless subscribers, but growth is accelerating. Verizon added 384,000 fixed wireless subscribers in the second quarter, which is about 50% more than it had added in the previous year. So that's pretty optimistic. Let's talk about Aries Capital, ticker symbol ARCC. So Aries Capital is a large business development company, BDC, that essentially acts as a lender to many of the mid-sized businesses that large banks tend to ignore. Now, the BDCs, they make great stock. They make great stocks for income-seeking investors because they can avoid paying taxes by distributing at least 90% of the profits as a dividend. So this is huge, guys. I just want to reiterate how powerful this is. BDCs can make great stocks for income-seeking investors because they can avoid paying taxes by distributing at least 90% of the profits as a dividend. So definitely be aware of these types of opportunities, especially this one. So Aries Capital, and I'm not sponsored by any of these companies, by the way. This is not a sponsored video. Aries Capital, their dividend payout is less predictable than Verizon's, but it also offers investors a much larger yield of 9.9% at the moment, which is just wild. So, about $33,700 is enough to set yourself up with $3,333 in annual dividend payments from this stock. Definitely do your homework on this one. And Aries Capital doesn't raise its dividend in steady increments, so it's not quite as predictable as Verizon, but its quarterly payout has gone up by about 23% over the last 5 years. Very significant. And by selectively lending to cash generating businesses that could repay their loans, many years of progress seems likely. And especially in the face of a recession and, commercial real estate loans likely going sour in the coming months and years, it's really important to have a good footing with some solid investments in the stock market, especially dividend paying investments, dividend paying stocks. And I want to talk to you guys about Medical Properties Trust, ticker symbol MPW. So this one is a real estate investment trust. And you really want to be careful about real estate investment trusts nowadays. But I do want to share this one with you anyway. But again, keep in mind, there's so commercial real estate right now has a bad rep right now. But you have to understand that some commercial real estate will make it out just fine. But there's some segments of commercial real estate, specifically like office space. I'm anticipating a lot of bruising on the values of those properties and any of the REITs that are real heavy in those types of holdings. So Medical Properties Trust, ticker symbol MPW. This one is a real estate investment trust that owns hundreds of hospitals and related acute care facilities. And like BDCs, REITs, also known as real estate investment trusts, they can avoid paying income taxes by distributing nearly all of their earnings to investors as a dividend. So needless to say, I'm a huge fan of REITs. Depends on what those REITs are invested in. Me personally, my own personal take on the Medical Properties Trust REIT and other REITs that are, well, let's just focus on this particular holding. So this holding is very heavy in hospitals. In fact, it owns hundreds of hospitals. And if you think about it, okay, if people are working remotely and they're working from home, fewer people are coming into the office, then you probably won't need as much office space if you're an entrepreneur, a business owner, if you have a business where you operate out of an office, right? And so it makes sense that those businesses might want to maybe not renew their leases or request that they can move to a lesser square footage amount of space for their business. If 50%, 75% of their workforce is now working from home, then why do they need 100% of the square footage for the business, as like no one's in the office, right? So that makes sense for demand for office space to go down. And of course, if demand goes down, then the lease and monthly rent that they can collect from businesses is going to go down. Hospitals, on the other hand, I feel totally different about that. I feel like hospitals, like, why I see no reason why demand for hospital space is all of a sudden going to go down drastically. Now, when I say I don't think it's going to go down drastically, I mean that I wouldn't be surprised if there's some degree of pullback. Maybe like some medical offices don't necessarily need as much space, but like a hospital, though, I mean, like a hospital needs to operate in a building that is designed to treat patients. They have an OR. They have built like hundreds of millions of dollars of equipment in these buildings, and they're especially built out to accommodate treating patients. So you're not going to do that from home for the most part. Now, are there some medical related opportunities to work from home? Well, probably. Like if you're like a psychiatrist, then you could probably do like some telemed appointments and not have people come into the office or into the hospital for that. But for the most part, like hospitals, I just do not see those going down in terms of the demand or utilization. So I would be confident to invest in REITs that are heavy in hospitals. That's me. But again, I'm not a financial advisor. Always do your own homework. Always do your own due diligence. But rather than manage the facilities that it owns, Medical Properties Trust, they simply just collect rent from more than 50 different independent hospital operators. And what I like about that is, number one, they don't have one hospital. That will be putting all your eggs in one basket. They have more than 50 different independent hospital operators. Its cash flow are generally reliable because it makes operators sign these long-term leases that transfer variable expenses associated with building ownership, such as maintenance and taxes, to the tenant. So even as these property taxes are going up, even as maintenance costs and expenses go up, the owners of these properties, Medical Property Trust, they're not responsible. They're not having to deal with these increases from the county raising taxes, from the maintenance companies raising their fees. That is going to be falling onto the backs of the tenant. And that is also going to be probably just kind of, they're going to pass that expense on to their patients and onto the insurance companies that ultimately pay a huge bulk of the medical related expenses that take place. So I think that this one's probably in a pretty good place. This healthcare REIT offers investors an eye-popping 11% yield on current prices because one of its larger tenants, Prospect Medical, has been unable to pay its rent this year. With such a high yield, an investment of just $30,400 is enough to secure $3,333 in annual dividend income. Now, you might be thinking to yourself, well, Ron, that sounds pretty bad. What is it? Medical Properties. Sorry, one of its tenants. So one of its tenants, it doesn't say who the tenant's name is, hasn't been able to pay their rent this year. But that's the great thing about diversification, because no most people are not going to be able to like just pick all of the best perfect investments and not like pick some duds, right? And so this is why it's great to have a REIT that has 50 different hospitals paying rent. So if one out of the 50 doesn't pay, chances are you'll be just fine, and you barely even notice it. And meanwhile the other 49 are paying on time. That's the value of diversification. In April, Medical Properties Trust, they told investors that it expects normalized funds from operations to reach $1.50 per share in 2023. But even if, and that's even if Prospect Medical doesn't pay rent for the entire year. So it's Prospect Medical that hasn't been paying its rent. Y'all need to get your bills paid. But even in a worst case scenario, Medical Properties Trust FFO, even in a worst case scenario, Medical Properties Trust FFO estimate is more than sufficient to maintain a payout currently at $1.16 annually. So yeah, guys. So these are the stocks that are paying dividends. And if you put a total of $106,000 into these, you will generate, or you should generate, around $10,000 in annual dividend income based on the calculations that I have shared with you guys in this video. So again, those stocks were Verizon, Aries Capital, and Medical Properties Trust. Now, obviously, you don't have to come to the table with $106,000, guys. You can start small. Start with where you're at with what you have. Me personally, I started investing with as little as $50 per month. Okay, so the key is to get started and get the compounding going. Get that basically free money. Get your money compounding and leverage these companies that are making billions of dollars in revenues and profits every single year, hand over fist. This is how we get a piece of that. We get a piece of that cheese that's out there. So anyway, guys, I hope you guys enjoyed our conversation. I hope you guys enjoyed hanging out with me today. If you did, please drop a quick like for the video. Also consider subscribing to the channel and check out my previous videos as well. And I'm gonna see you guys on the next one.